I like it. Grace under pressure. Well, in the meantime, no, I want to start with this because I want to get this out of the way. So here, hand it over. Here, just give me the pen. Well, all that fanfare for nothing. Now, I don't think that needs any explanation. I don't know how many of you are still holding on to crypto, or if you've taken profits. My background actually goes to nuclear physics. I did a PhD in Berkeley, and we ended up doing a lot on the periodic table of elements, including discovering element 110 and proving out 106. However, it wasn't my love. I wanted to go and work for Bill O'Neill. He's a legendary investor in the States based on his track record, and my heart was in stocks and speculating. And consequently, I helped run his personal wealth, and I was a top performer, so Wiley & Sons asked me to produce books, and here are 3 of those books. One of them went bestseller, and one of them was translated into a number of languages. Here are 3 of them. Now, the reason I say this is because speculation has always been in my blood. I like the game of it. It's a great psychological and analytical puzzle, and it keeps my interest, whereas nuclear physics was very black and white, very cut and dry and challenging, but it didn't have the psychological component. So I really enjoyed writing about my experiences, and since I've been involved with blockchain from early 2013, I've written quite a bit. I've published a lot of articles on the net, and if I end up doing a book, books are very slow these days, but if I end up doing one, it'll be talking about the revolutionary aspects of blockchain. But I've had people come up to me, not just this weekend, but say, why you bother publishing anything in this space? Bitcoin is dead. Isn't it? I mean, we've got Jamie Dimon of JP Morgan, many other CEOs have onboarded saying that Bitcoin's a fraud, it's used mostly for illegal activities. A friend of mine, Nouriel Rubini, also known as Dr. Doom and also known as Has-Been, has said it's gone bust for good. He tweeted this just a few days ago, that blockchain is done for. And a lot of these guys have called it a Ponzi scheme. And there's a site, 99bitcoins.com, it said that Bitcoin has died 370 times. Based on news accounts since 2010. Now, I think these guys like Rubini, who, by the way, at a friend's cocktail party in New York, we cornered the guy and we said, justify your accusations against Bitcoin and blockchain. He pivoted out, literally did a physical pivot because he has nothing to back up his claims. He's just a lot of hot air, in my view, and it makes the press. In fact, not only that, the US Congress listens to this guy because, you know, as we say, politicians are the last to know, they're the slowest animals in the herd. But where they are correct is that crypto is way overvalued. Even with the recent sell-off, it's still overvalued. And consequently, there are many worthless ICOs out there. But I will say that despite this crypto winter we're in, there is a massive migration of top minds into blockchain, and not just now, but back in the day, 2012, 13, 14. And if you look at the trends and compare the number of great minds in this space that have migrated in compared to the internet back in the, say, the mid-90s, it's a huge difference. Now, this innovation that's occurring at breakneck speeds over these years, it's an exponential growing technology. And here are just a few of the literally potentially hundreds of examples, but I'll highlight personal digital identity, and there was a talk given earlier today, and it's great for the billions of people in third world countries who don't have bank accounts. Now they can use KYC through their cheap mobile phones to actually transact value for the first time in their life, and there's about 3 billion of these people that are going to be coming online. We also have digital ID systems for the Internet of Things. Walton Chain is one company that does RFID tagging of all these items and putting them on the blockchain. And in fact, Samsung's head guy was so impressed with this technology, he jumped ship and joined this Walton Chain company last year. Its cousin is VE Chain, and they're doing supply chain management. And one specialty that's been in the press quite a bit these days is STOs, ABTs. ABTs is, as you all know, asset-backed tokens. And essentially, the space has been criticized for these ICOs being backed by nothing, just an idea. Well, asset-backed tokens are ownership of code that can come to represent a stock or any kind of hard asset. And the banks aren't tokenizing these securities because they still have this resistance and a crypto fear, but that's changing. A lot of these institutions are going to start onboarding these technologies. And these ABTs are, you could call them hybrid stablecoins. They're not Tether, which is questionably backed one-to-one to the US dollar. They refuse to submit an audit. Nevertheless, you've got these hybrid stablecoins, which are actually backed by whatever the hard asset is. And like I said, it could be collectibles, art, real estate. It could be even a manufacturing project or an agricultural project. And these STOs that the press mislabels, there's no such thing as security tokens. There are tokenized securities, and that's what ABTs represent. So I think this is going to be the next big wave in ICO development. And finally, we got retail on the blockchain. Now, you can tokenize this entire chain from tracking to security to sales between all the components of retailer, customer, and factory. And it's a far more efficient way and cost-effective way of doing things, and the savings can be passed on then to the retailer and customer. In fact, we've tested out one of these platforms and run the numbers, and it's quite a difference from Amazon, shall we say. Now, Rubini, as I said, has declared it's over for the space. And I would say that he is right in one sense, that every bubble that has come before Bitcoin and the dot-coms burst and never reinflated again. It was over. Now, the two exceptions are the dot-coms and Bitcoin. Now, NASDAQ lost 87% when the bubble burst from 2000 to 2002. It's never lost that much in its history. So you could take a balloon and deflate it all the way to 87%, but it hadn't burst. It actually grew bigger because Amazon, eBay, Google, and the likes reinflated the balloon. The dot-coms, of course, most of those were dot-bombs, and they went bankrupt. And the internet, of course, has become one of the most game-changing inventions in the history of humanity. Now, Bitcoin had even more serious drops. It's lost up to 94% of its air, but each time it reinflates to a larger size. But the air needs to be replaced with something like helium or even hydrogen to really make it go. And most of these ICOs that are built on vapor, they get vaporized. But the ABTs, the retail on the blockchain, digital IDs, these all contain value and utility. And this is going to allow the crypto balloon to soar. This is a history since 2010 of all the corrections in Bitcoin. You can see there's 94%. The last correction was 85%. Right now, we stand at about, I think, 83%. And so, while I, of course, vehemently disagree with the likes of Jamie Dimon and Nouriel Roubini, I also disagree with the likes of the other end of the spectrum, the guys like Mike Novogratz, who are way too optimistic. And when it was still trading at 6,000s, they were saying that that's a major low. And Mike tweeted this, and he said it's on the basis that they've retraced all their gains since the prior bubble began in late 2017. And there's no rhyme and reason that it has to find its low when it retraces all its gain. It's, in the history of technical analysis, show me statistics that prove out that kind of thing. I think it's in his vested interest to try to call bottoms and be correct because he wants to see this go higher. I mean, we all do. But on September 18th, I published that while it's possible that Bitcoin, along with the crypto space, could stage a more pronounced rally from these low levels, as well, anything's possible, it's far more likely that Bitcoin needs to correct substantially further from its well overvalued levels. Now, I wrote that when Bitcoin was at 6,500, and as of November 25th, it went all the way to 3,474. And you can see on this daily chart of Bitcoin, this is this year, each time it bounces on a price volume basis, it's a weaker bounce. And we call this dead cat bounces. And even here, the cat's not even meowing. I mean, and so of course, it had to roll back over again. And I was telling members and subscribers, get the short on Bitcoin, but don't short from an unreliable exchange. Maybe use a CME, maybe buy options from OKX, something like that. And of course, this is an old chart. This is only a few days old when it was still up around 46.38. And as I said, it's off peak. Bitcoin is 82%. I know it's bounced, but now it rolled back over again. And I think there's a lot more selling that's going to come. The market cap's all the way down to 66 billion. Ethereum, poor Ethereum, has lost 92% of its value. It's right around 103 at 11 billion. And if you look at, there's a site that tracks the performance of all the crypto coins. So if you look at the fourth best performer in the, I think, 2,000 coins it tracks, it still lost more than 70% of its value this year. So basically every coin's been taken to the shed and shot. And also keep in mind that just because Bitcoin is off by 82% doesn't mean it can't fall further. It's corrected as much as 94% twice since 2010. And with these percentages, keep in mind that 94% is not a 12% fall from 82%. It's actually a 67% drop if you do the math. So I tell people who are still sitting with their coins, you might want to sell half. Now, this is one of the charts I rely on. This is a metric, so that when I take these metrics together, they're excellent at predicting major tops and bottoms in Bitcoin. And as I said, I've been trading it since 2013. You'll see on this chart that every time this is a network value to transaction signal, and every time it peaks, like it did in early 2013, late 2013, or most recently in late 2017, that is the high for Bitcoin, and it tends to correct by a fair sum. Now, interestingly, this peak here was not met by a price spike in Bitcoin. In other words, there was a lot more selling that had to take place, and it actually did fall another 78% over the next 6 months. Right now, this is right down in here. It's gone straight down because crypto space has gone straight down, and it's only going for 2 months. In other words, this could have another few months to fall before it actually hits a major low somewhere around here. Now, this is another metric I use. This is on-balance volume. For those who don't know, it adds up the volume on up days and subtracts the volume on down days. And what it shows is the dead cat bounce concept, that every rally is met by a sell-off that's deeper than the prior rally. So in other words, it's basically saying that this Bitcoin chart, which is trying to hold its own, is not. This is showing a far more realistic picture of where Bitcoin's going to go, and certainly from this point, this chart was printed out in mid-October, and certainly it's gone a lot lower than this level here. And here's another chart that also showed that predictive value. You have low volatility phases, which show temporary bottoms, and it tends to rally after these low volatility phases. And this is the Bitcoin price going all the way up to the peak. And then it settles down around here. And I pointed out that, again, this is an old chart, but the Bitcoin volatility was not sufficiently low, so a further correction was likely, and that price correction has now materialized. This is a chart I like to track Bitcoin network momentum. And it's a pretty simple chart. It shows that momentum is very low. That Bitcoin still has a ways to fall. And of course, Bitcoin had been very, very low. There's almost very little trading activity going on in it. And now, of course, it is in the midst of a correction from a few weeks ago, after trading sideways for a number of weeks. And this is another chart that is a go-to chart of mine. It's a market value to realized value. And essentially, it shows that when it gets under this red line, the market, this MV to RV ratio, when it's under this red line, that is often a buy point for Bitcoin. And right now, it's still not under that red line, so it still needs a ways to go. The realized value, for those who don't know RV, it tracks lost coins plus coins that are used for hodling. People who are long-term investors, these are strong buyers. They're not rattled by the drops in price. And this expresses the collective psychological sum of seeing Bitcoin's value and long-term potential. Now, this is an interesting. This is showing major bottoms in Bitcoin, and then where it's at right now. And you can see that, again, this is an old chart. This is when it was at, what, 4,500. And 2,950 is simply an 85 correction, which is the same correction as the last bubble that burst. There's no rhyme or reason for 85%. It just happens to match it. 1180 makes a little bit more sense. There is an area of support between 1,000 and 1,200 that could keep the price elevated, or say that could be the major bottom in the price of Bitcoin. Remains to be seen, but I think that's a little bit more reliable. And also 1180 represents a 94% correction, and Bitcoin has never corrected more than 94%. And of course, the issue there is we've got a lot of headwinds, but a lot of tailwinds, and they're going to be tug-of-warring in terms of setting the price of Bitcoin. I mean, we've got regulations coming on board, which could be bad for Bitcoin, especially if some of these exchanges get taken down, like Binance, for basically violating laws. And on the other hand, the regulations that get formed are necessary for the space to grow and for institutions to start onboarding these technologies. So that's obviously very bullish for Bitcoin. And you also got the ETF announcements that keep coming, and they never materialize. But an ETF could be due sometime, say, next year in the second half. Now this is a chart of the cycles. This was a very interesting way of looking at Bitcoin in terms of faster, and as we progress, the cycles get a little slower. And if this pattern repeats, then it says that by October of next year, Bitcoin will have reached a major low of 3,000. And it also says by late 2023, it'll be at 160K. So at any rate, this is a chart that shows that despite the crypto winter, and you can see here, this is all 2018, it's still going up. And the Bitcoin hash rate towers above all other coins. It's like the TCP IP network effect. Back in the early 90s, TCP IP became the internet standard, even though there were superior technologies that were faster and more efficient. But TCP IP had the network effect. Now Bitcoin, of course, has the network effect, so it's arguably the go-to coin. There are platforms that are helping Bitcoin to evolve. It's not a static technology, none of this is. Guys like Robini talk as if this technology is static and it's not going to ever advance. But you've got Lightning, liquid sidechains, Rootstock. Rootstock enables companies to onboard onto the blockchain Bitcoin platform, much as companies have used Ethereum to do. But Bitcoin is more secure because it has a far higher hash rate, and it can also quickly onboard all these companies from the Ethereum blockchain onto its Rootstock. And Rootstock is still in beta, but once it is full bore, I think that could help the price of Bitcoin immensely. The dominance of Bitcoin is 54%. In other words, its market cap represents 54% of the total market value of all coins combined. That's up from 32%. And I still say that the killer app of Bitcoin's blockchain is a store of value. Now there's $8 trillion worth of gold in the world, and gold has often been called the store of value. But Bitcoin enables P2P value exchange. It's secure, it's easily exchanged, and it's of course decentralized and censorship resistant. So I think that it's a matter of time before some of the major institutions and governments start to align themselves with blockchain. We already know that the CME has Bitcoin futures now, but I think they're going to be wading into the crypto pool deeper, especially once these regulations start to take hold. Now this was, there's a lot of discussion about where is the crypto space compared to where the internet was in the 90s, and I've heard some good arguments. People said 2017 can be like 1996, and that's based on the equivalent number of users. That is, we're at 1% roughly right now, it's 77 million people. 2017 could also be like 1999, and that, of course, that's a no-brainer. It's the dot-com boom and all these vaporous companies were going through the roof through these IPOs, and of course last year we had all these ICOs do something very similar, and then both bubbles blew apart. But that said, I think that right now we're sitting more like 1994 or post, just after 1994, when dot-coms had a big run, and then there was a settling effect, kind of a bursting of that mini bubble in 1995, and that's based on these first mover concepts back then going bust. They were too early, and the equivalent right now is there's a lot of great concepts, but they're a little bit too early. But these strong blockchain platforms are just emerging, and they are being backed by real value and function. The ABT concept, STOs, that kind of thing. So I don't think we're not as far back as the starting line of the internet in 1992, and we're not at 1999, which that was what is referred to as Web 1.0. But we're probably somewhere like 94, 95, and as I said, there were many internet use cases, but the online retailers of that year failed, mostly because there were too few internet users, there was too little trust. A lot of people said to me, this is a place where credit cards get ripped off. Why would you ever want to use the internet for that? And there was too little infrastructure. So you can't launch a high-speed video streaming service if your potential customers are on dial-up modems. Now, today we have many crypto use cases, but they're still like back then, still too few people utilizing cryptocurrency. There's, of course, lack of trust, lack of infrastructure. So these game-changing use cases need to be more manageable, user-friendly situations, much as AOL did for the internet space way back when. Then they will get mass adopted. But in the meantime, the infrastructure is being built out, and the build out, from what I can still see, it's absolutely rapid. And these are, as I said at the beginning of the talk, these are all exponentially growing technologies. And because of that, my firm view is that Bitcoin will live to see new highs at some point. That chart I had earlier, Bitcoin at 1 million, if you do the numbers on that, if it takes 2.5 years for it to get back up to its old highs of about 20,000, every time it's done that, it tends to go up 10 to 20-fold. So that would represent a value of $200,000 to $400,000 for 1 Bitcoin, and that would be somewhere perhaps in late 2022. So my call still stands at 1 million Bitcoin, some say late 2023, and I firmly believe that the growth curve is going to continue to be exponential, and it's going to be a really fast ride. So buckle up. Thank you for coming to my talk.
Thank you both. If you're up for it, we have time for 1 or 2 questions.
Sure. Okay.
Do we have anybody with a question? Anybody? No questions. Okay. Okay.
Hi. What do you think where these SKOs are going to be coming from?
Oh, well,
are they going to be created by some central authority or made up by banks or some things by themselves?
I think this is where a lot of innovation is taking place as we speak. There's a lot of hard assets that need to be tokenized because then it introduces liquidity into traditionally illiquid spaces like real estate. Kevin O'Leary was he's a multi-billionaire who tried to tokenize a $300 million property last March, and that made the press in a huge way. He never accomplished it because I think the regulatory burdens. However, in today's world, especially countries like Estonia, you can actually create something that is compliant, that is privately owned, that is onboarding intelligent projects, that have a meritocracy. So I would say that it's like with stock picking. You know, if you're going to have a fund of sorts, and this fund is a basket of stocks, make sure those stocks are traded properly, or in the case if it's a long-term thing like a Buffett style, make sure those stocks are very high grade. Same with the real estate basket, collectible basket, whatever it is. If it's real estate, make sure that those projects are vetted very carefully so that there's high yields with very low risk. And then when you onboard these projects, the savings, because of the blockchain concept, is passed on to the subscribers and also to, the whole chain of people. It's also the same with retail. Retail, you have all the supply chain, and you have all the factories, the wholesalers, the retailers, and the private customers. And these concepts, I think, are going to be widely adopted because blockchain allows for greater efficiency and lower cost across the board. So when something has an economic advantage like this, it tends to take hold and dominate. And I think that's blockchain's secret weapon on so many platforms.
I had a question from the back here as well.
Thank you, very good presentation.
Thank you.
Now, regarding exponential growth, can you share with us your forecast? How many users are there in 3 years, 4 years, 5 years?
In terms of which?
Number of users on crypto.
Oh, well, I think it's still exponentially growing. So if you do the numbers, I think we're still in a very nascent phase, like I said, at 1994, 95. So I think the number of people coming on board, right now it's 1%. That's about 77 million people globally. That's a trickle. I don't see it slowing down at all for the next several years. At some point you will reach, the law of diminishing returns, but I don't think that kicks in until, maybe 2025. So, I would expect to see, not 1%, but several percent. If we have several percent of the world involved in this in some capacity, that's a 7-fold gain from where we sit.
Thank you very much. That's all the time we have right now. Thank you. Round of applause for Dr. Kacher. Thank you. And here on this stage, we shall continue.